I'm thrilled to be joined again by Jerome Kemp, Baton's senior advisor. Jerome, earlier on in our piece, you spoke about the sort of impending revolution, a real drive for change. And I guess as a veteran of the industry, and perhaps we both are in different degrees, I'm just interested to sort of get a sense, do you think there's something that's changed that means we're more likely to see people adopting new technologies and new processes now than we have in the past? We've had a few false storms. Just wondering what you think might have changed.
I think a lot has changed, actually, Alex, and I think it's a fascinating question. I mean, both of us come from the investment banking backgrounds, and I guess that we are bound by limitations relative to budget, et cetera. I think that really now, for the first time, given that over the past 10 years we've lived through arguably 4 or 5 major sort of Six Sigma type of events or Nine Sigma events in the market, that the actual amount or the quantum of risk that is in circulation on a daily basis, the amount of risk that we as FX traders, as prime brokers, as clearers, live with on a daily basis, has just gotten to a point where we need to do something about it. There's only so much that we can sort of perfect our risk models without starting to, take on the challenge of the technology that underpins, our ability to settle a trade. I think it's interesting to think about, FX, for instance, along a couple of parameters. You've got, the parameter of the absolute quantum of risk that one undertakes in trading, the amount of liquidity in the market, and I guess let's say the cost of funding. So focusing on the risk parameter, I think what Baton is demonstrating to us, and this is quite interesting, is that we do have a much better understanding of technologies that can help us actually have a significant impact on those settlement cycles. I think before we simply admitted that we don't control time, and so we have to live with the systems that exist in order to enable us. Sorry, thing just fell out of my ear. We have to live with systems that are in place. We really didn't question the nature of the overall systems that were supporting these daily processes, and Baton has actually allowed us to step up to challenge the sacred cows of the industry, and I think that's super important. Why are we doing it now? Because the numbers are massive. Alex, I think you and I, we've spoken many times about this. On a daily basis, there are close to $9 trillion worth of trades in the FX markets that are not benefiting from PVP. And that's a 2019 number. That's the BIS data that I'm just quoting to you. And those are big numbers. As an aside, in clear derivatives from, January of 2020 to March of 2020, the overall initial margin held by clearers grew by over 48%. I mean, to $850 billion. That's a massive amount of growth in that overall exposure that, again, settles on a 24-hour cycle. So essentially, you go to bed with, that overnight exposure. Something needs to be done about that. We need to be able to sort of, collapse the time frames in order to essentially, on the one hand, better, channel that risk, ensure that obligations are being met. But also, I think, and this is where it even gets more interesting in my view, arguably to give much better flexibility to market participants in the terms that they manage their liquidity on a daily basis, and how they think about their sources of funding for the various currencies that they're active in. So I think coming back to your original question, why now as opposed to why in the past? Because I think there is a confluence of events. There are very big numbers in play right now, and I think they're only going to grow. I also believe that there are considerations around balance sheet, which are driven by these much bigger numbers, as well as capital that are coming into play as well. And again, the capital and balance sheet constraints, in my view, are only going to become more significant as these emerging markets take on even more significance in our daily trading and money management activities. And so it really is incumbent upon the industry to take the steps in the appropriate direction to work with technologies such as the ones that Baton is developing to essentially create much safer, secure, and much more controlled trading and settlement environments.
That's great. Thank you, Jerome. I think that's really helpful. I have a second question for you, and it relates to the process around taking a decision, getting budgetary approval, getting consensus at a large bank. We all know that's a real challenge these days, and justifiably so, I guess, in many ways. Firms want to make sure they're spending their time and efforts in the right sort of direction. For a project that thinks about something as fundamental as settlement processes and settlement risk, how do you think a leader can look at this and think about how they can achieve consensus and evaluate the possible benefits of a solution in order to get sort of progress and start moving forwards?
Yeah, Alex, it's a very interesting question, and it's one that that I've grappled with over the course of my career. And I really do think it comes down to the essential, sort of if I'm talking with a vendor about, a new process, a new platform, a new protocol, one of my first questions is, well, how disruptive is this going to be from what I do today? Because there's always this playoff between, disrupting an existing environment for a better outcome or not. And I think, therefore, that if the vendor is able to, say to me, okay, well, we're not actually looking to, reinvent the wheel for you guys in terms of disrupting everything you do, in terms of the APIs you leverage today, in terms of the protocols perhaps you leverage in terms of satisfying payments, but instead we're going to essentially work within those structures to improve the overall performance of what you do today. That's when I start really listening, quite attentively. I think, again, one of the things that is quite interesting and I think is quite determinant in terms of deciding whether to go forward with an initiative is the ability to do a proof of concept and what we could actually see come out of that proof of concept. So, for instance, with Baton's platform, if I'm told that, I can take a settlement cycle from 24 hours down to 3 minutes, again, I'm listening quite clearly. And if, I'm told, for instance, that, in 3 months, I'll be able to essentially see this claim actually, validated, then again, I'm listening quite clearly and quite attentively. And so I think that those are the types of things. I think, what we hate in investment banking in particular is boiling the ocean in order to essentially achieve, a new normal. I think we like to achieve our new normals through evolutive processes and ones that do not overly disrupt the status quo. So if I can work within the broader, call them constraints of the APIs that I leverage today in terms of the payment protocols that I use today, but I'm able to take better control of the overall process by, for instance, leveraging distributed ledger technology, being able to essentially myself take control of what thresholds actually trigger a settlement and at what frequency. Then I think that those appear to me to be achievable goals within a manageable time frame, and assuming that clearly the cost factor is one that is easily agreed or manageable, then I think that that's something that resonates or should resonate quite loudly with a potential adopter, or I would even call them a leader in this space, because at the end of the day, this is really a leadership question, Alex. I mean, we all know that this risk agenda is only going to become more and more of a constraint, and therefore there's even more of a motivation to work with providers to define a solution. So I would call that as we're and I called it the vanguard earlier, but working with the vanguard are leaders that are going to essentially support these efforts, test these hypotheses around the application of these new technologies to take us to a much different and arguably much more secure and empowered space in settlement.
Yeah, I think that's really interesting the way you say that, Jerome, and certainly the observations that I've made have been, maybe you can sort of comment on these, sort of setting a set of success criteria that are well defined and constrained, not letting the perfect get in the way of the good. And just thinking about definable steps whether you can evaluate a solution really carefully and see the results.
Yeah. But you know something, Alex, I think it's interesting you say, perfect and good. I think it's not that difficult given the general, state of technology that we work with today to have something that is just light years beyond where we are without, being anywhere close to so-called nirvana or perfection. I mean, today, Alex, however you cut it, we are essentially, working with batch-based, server-based batch cycles, which function, on 24-hour, time frames, which essentially, cause, anyone who is in the process, who's in the business of settling trades to, ramp up a certain amount of settlement exposure on the balance sheet and essentially, live with that overnight. The other thing, and I think this is something that we really haven't spoken about, is that around all of these processes, because they are so fragmented and disjointed, you literally have armies of people, trade checkers and middle office staff and back office staff who are constantly chasing down trades, reconciling trades, investigating breaks, and again, this is a major driver of a telescopic effect of being able to reach settlement on a very large base of underlying assets. So I do think that because the industry has been, call it, if you'll excuse the phrase, somewhat with its head in the sand, waking up to what is available in the market today in terms of the technologies that can be brought to the fore in terms of addressing issues around broader settlement exposure issues, getting from bad to good or bad to near perfect is really not that much of a stretch.
So, Jerome, another point I wanted to raise with you was the fact that within the capital markets businesses, there's a tremendous amount of sort of siloing of business technology. One desk, one business will be perhaps trading the same products as another. Certainly cash, of course, is an element for almost every desk. And yet, for perhaps legacy reasons, they're using siloed technology and siloed reporting and siloed processing. So I guess my question to you is this. Do you think it's vital that these silos are broken down as a first step, or is that sort of a natural evolution that will come with the implementation of new processes and new technology?
I think that the breaking down of those silos, Alex, is already something that's very much in process today. I think both you and I have seen it over the course of our careers, in the banking industry. Today, I don't think that you can, be a salesperson in FX without talking about, credit markets, without talking about equity markets, without talking about futures markets, et cetera. Everything is very much interrelated, interconnected. And indeed, trading desks at major banks are now sort of, blurring those lines between the asset classes themselves, and very much focused on offering that multi-asset, coverage to clients. It's interesting that really has not sort of fully sort of flown over to the settlement side of the equation. And I think it's because we're very much, in need of validating, our assumptions about what can be achieved with at least, one asset class for starters. But I would argue, given, what we know today, Alex, that the validation of, the applicability of distributed ledger technology to FX settlement, for instance, whether you're talking about, between counterparties or even internally, for settling amongst, various Nostro accounts in a much larger sort of investment bank, trading organization, we get the validation there that, this is possible, it does work, it does produce very meaningful results. Then those same principles can be ported over obviously with changes depending on the underlying trading asset to other areas. I think, let's get the validation in FX. It's already, happening today. Baton is already working with, almost a dozen, clients who are either testing or have adopted, Baton's technology. So we're getting a good validation point that this technology, does deliver. Could it, for instance, and this is an area obviously that's very close to my heart, could it be applied to settlement in clear derivatives? Arguably a bit more complex, just given the vast number of futures and options contracts and swaps that clear on a daily basis, and the amount of fragmentation that exists, across market participants. But again, I think the same principles, could be applied, and I think it's a natural progression of what Baton is working on today in the FX space, for it to eventually branch out to look at what can be done in clear derivatives, and even in the cash space for that matter. I mean, the possibility.
Yeah, and I suppose when I think about this, I think about the cash legs of all sorts of different transactions that are currently, in many cases, being settled through distinct settlement channels, even collateral versus a settlement, being settled through a distinct channel. And it would just make sense to me to sort of pull all of that together and have netted settlements where possible.
Yeah, agreed. I think that's the journey we're on, and it's timely and it's exciting.
That's great. Jerome, thank you very much indeed for those thoughts. Very interesting.
Thank you, Alex.